Good afternoon. Yeah, lots of LSEG people here today. Hi.
We've got questions.
Very good. I have questions too. What's the joke? I'm a mathematician, of course I have problems. Okay, so good afternoon. I should start, I guess, so as not to run out of time. My name is Roland Stamm. I work for a company called Acadia, which was recently, well, a year ago bought by LSEG. So we are part of the post-trade division of LSEG. And today I'm going to speak about a project of ours in Acadia that has been going on for quite a while. I'll share a bit of its history, which is called ORE, the Open Source Risk Engine. And that seems to be quite fitting for this convention. Okay, let's start. So, what is ORE? The name is telling you a bit, but it's really a lot. And I'm very, very excited about it, and I want to share that excitement with you. So hopefully after this, a lot more people will go out there and proselytize ORE. So we are sponsoring it, meaning that we started the project, the ORE project, and we are continuing to do so because ORE is one of the backbones of one of our services, or two of our services, current services. So we are going to continue to sponsor it, but what we are also looking for is really contributions from the industry. So everybody is absolutely invited to join the force, to give us pull requests, give us something to look at. Okay. It is really a full-fledged risk engine in the sense that you can do lots of different analytics with it, starting, of course, with valuation, both derivatives but also the entire balance sheet, so loans, bonds, and so on. In terms of pricing, it does XVAs, meaning value adjustments of different sorts, like all the letters you can think of: CVA, DVA, FVA, MVA, KVA, these kinds of things. Market risk, and in particular as a subcategory of that, initial margin. And of course credit risk, which kind of complements the credit risk, the XVA analysis that we do. As I said, I'll share a little bit of history. So the whole thing started with QuantLib. I hope, or I guess that most people here in this room are familiar with QuantLib. That's a C++ pricing library. It has the disadvantage that you really have to be a C++ developer to actually use it properly. And nevertheless, a fantastic project that we built on very, very heavily. So then in 2010, there was a company that was founded that I actually started working for called Quaternion. I won't go into the definition of a quaternion, but as a mathematician, I know. If you want to know, talk to me. And this whole project started as a proprietary engine called Quaternion Risk Engine. And then we realized after a while that nobody wanted to buy our proprietary engine because there were lots of other systems out there, third-party systems. So we decided, well, let's put this thing on its head and let's make it open, right? Publish everything that we have. Well, at the time, we didn't publish everything. We published about 50% or so of the library that we had at the time. And we started a cooperation with Acadia, building out this ISTA SIM service. So SIM is the standard initial margin model that is issued by ISTA for computing initial margin in the context of the UMR that we already heard about before. And ORE became the backbone of that service. Then we were bought by Acadia. They didn't want to share the revenues that we created with that service, so they decided to acquire Quaternion. Then LSEG acquired Acadia. Like I said, we are now part of the post-trade division. And believe it or not, just at the beginning of this month, we had the 12th release of ORE. Especially over the last 2 years, I would say we've been very busy releasing. So we had 6 releases since end of 2022. Okay. So what about derivatives valuation? We support all asset classes. Oops, that was one too many. Anyway, the most prominent feature here, what we released last year, and that is really something that I'm very excited about, is the scripted exotics module. So we have a scripting language that you can use to design or describe any payoff that you can think of and any contingencies like triggers, options, target return, payments, all sorts of path dependencies that you can think of, right? And as I said, this covers the 150 plus clients that Acadia has in the SIM space, both for SIM calculations on a daily basis and also SIM benchmarking, which we do usually on a quarterly basis for our clients. And the SIM calculation service really results in the 120 or so SIM clients to move billions, if not trillions, of margin on a daily basis. So this should give you some confidence that what we're doing is, well, making sense. Okay, and we are continually adding to the product types that we're supporting, that you can see here on the release 12. We have started to invest more in model development, starting with something like the Sabre model for swaptions and caps floors, but also basic stuff like building yield curves. So far, until version 12, you could only interpolate the yield curve with one methodology. Now you can split that into different parts of your yield curve. For instance, at the front end, you could do, I don't know, log linear, and at the end, you could do cubic spline or whatever. And also different prices. Okay, so on the exposure simulation, which you need for XVA, but also for the credit risk side, like potential future exposure calculations, we have a cross-asset model that allows you to evolve all those 6 asset classes that I was talking about in multiple currencies, using an American Monte Carlo framework and a multi-threading procedure so that you have good performance. Maybe this is the right point. We are also investing a lot at the moment to increase performance. So there are 2 things to be said in that area. One is GPU support, so moving the multi-threading to GPUs, where we see very, very promising results already. And the other is, once you start talking about sensitivities of XVAs, things really become messy because you need a lot of calculation power for that. So there we are investing in researching algorithmic differentiation to make sensitivities for the XVA framework feasible and performant. Yeah? And yeah, I already mentioned the different XVAs that we are supporting. That includes, of course, taking netting agreements into account, taking collateral agreements into account, thresholds, minimum transfer amounts, and so on, and the margin period of risk. So all that you need to properly calculate XVA. And again, some news, new features that we've seen is XVA stress testing, which we didn't have before, and sensitivity calculations, and some improvements or extensions of the random number generation that we do. Okay, on the market risk side, obviously, sensitivity analysis, this is the building block for something like SIM, right? Because SIM is nothing else than a standardized sensitivity and then VAR calculation. So we do that not only in the zero, so on the bootstrap curve space, but also in the PAR space, which is again what SIM prescribes. You have to show sensitivities to market instruments rather than to bootstrapped instruments that don't exist in the market. Stress testing different VAR methodologies, and again, multi-threading for the market risk calculations as well, if you go, for instance, into historical scenarios. And new here in the market risk domain in release 12 is stress testing also for par rates rather than just zero rates. We added the historical simulation VAR, backtesting, which we have as a service, and also P&L and P&L Explain. That wasn't there before. So some of these were actually results of cooperations with clients where we are implementing ORE who are replacing their in-house or third-party systems for market risk analysis, and they were asking for these kinds of things to be developed. Yeah? So that's what I meant when I said we keep sponsoring it as part of our day-to-day business. Yeah, initial margin. Not too much to say. We have the ISTA-SIM model, as I said. All the versions that were published since 2016. You can input a CRIF file. So what I'm saying here is you can really calculate SIM yourself if you have a CRIF file. You can also calculate all the power sensitivities that you need. What you cannot do is the bridge between that. That's our secret sauce. I mean, we need to make some money. Is from taking the sensitivities to a CRIF file, right? That's particularly difficult in the equities and credit space because you have to do the mapping into the buckets. So that's what we do internally. That's proprietary, but the step up to generating the power sensitivities is in ORE, is free, and also taking a CRIF file and generating the SIM that you need to exchange is also there. Yeah, and then there is a model for dynamic initial margin, meaning the simulation of your expected initial margin in the future. There's a relatively simple regression model in there. And we are also doing research at the moment to improve on that. Yeah, that's not that astounding, let's say. The schedule calculation is rather straightforward. Okay, on the balance sheet valuation, I already mentioned in the very beginning, we support all sorts of cash instruments or also CLOs, structured loans, that kind of thing. On the credit risk side, I already mentioned basically the simulation itself that you do for XVAs is the same as for PFEs. Maybe you want to use a different calibration, let's say to real-world volatilities, things like that, but basically it's the same thing. We have a credit portfolio model that includes bonds and loans with the derivatives, and also portfolio loss distributions where you can really not look at individual trades but at the entire portfolio. So very interesting stuff. So it's free. It is really a free BSD license, so the most communist version that you can think of. You can use it as much as you like. You can repackage it and sell it if you want. You can build it or integrate it into your own code, whatever, right? So it is really the open source thing that you think about when you hear the name. We heard in the very beginning in the morning about open washing. This is not open wash. This is the real thing. It's been made more and more accessible to end users. I mentioned in the beginning, QuantLib is rather complex in that you need to be a C++ developer to use it. ORE, we are trying to get it to a point where all you need to be is really an expert in the instruments that you're looking at or the portfolios. So a subject matter expert, but you don't have to be a technician or technical expert, right? So we have a lot of documentation. By now it's 800 pages plus. We have 70 examples. Just 20 added in the latest version. So again, that shows you how much drive there is behind this still. We have what is called the ORE Academy, maybe a pompous name, but already we have something like 12 or 15 videos uploaded there, which help you get to grips with ORE, which we're building out. Obviously, it is an activity that we need to invest in, right? So don't expect it to be one video per day or per week even, but it is moving forward. So the tutorial videos are fantastic. The person who is responsible for that is doing a great job. And another thing that allows you to use it as a non-technical person, at least you only need to know Python, is the Python wheels version. You can use it in a Jupyter notebook, for instance. Again, all the examples that we have are coming with Jupyter notebooks. And all you need to do there really is just do a pip install open source RISC engine, and you have it in your Python library. So you will have access to a lot of the analytics that I showed you. Yeah? Maybe not to all the data structures. So that is something that we will continue to work on, but all the analytics are there. Okay. Resources. Follow the links, so opensourcerisc.org. There you find the documentation, you find the link again to GitHub. There's the YouTube channel, like I said, the ORE Academy. Watch it, subscribe to it. That will be very good for our friend who is doing those videos. And of course, there's Acadia, the team you can ask, yeah, if you have problems. Okay, I already mentioned there's a huge amount of documentation by now, where you find, first of all, the description of all the examples, then you find the ways how to use the trade representation, the scripting language, and so on. Maybe I should mention this here. The trade representation is XML. I think I have an example in the, sorry, the appendix. Yeah, so this would be a swap, yeah, a standard swap. Not too exciting, but that's basically how it is represented. It's similar but not equal to FPML. Especially over the last years, it has significantly diverged from that, I would say. Now let me get back to where I was. Sorry about this. Should have prepared this. Okay. You see there's a long chapter just about the scripting language, which is obviously the most complex bit of the trade representation if you want to do that. Roadmap. I already mentioned it's the backbone, ORE is the backbone of our services, our quant services in Acadia. So you can rely on us doing extensions as the product scope grows that our clients are sending to us in terms of the market data that we need to represent or price the clients' portfolios and things like that. So there's a steady stream of bug fixes and extensions just based on that service. Yeah? And because of its importance in the industry, you can also rely on us doing a good job there, because obviously, as I said, there's billions of collateral hanging on this. Yeah? So that should give you some comfort that there's activity there which is making this a robust system. We are seeing more and more contributions coming in. Still, it's a trickle, I would say, not a steady stream. We would like to change that, really, to get more and more input from the community. And as I already mentioned, so the latest release had a lot of additions because it's been 6 months since the last version. We have 400,000 lines of code now in C++, which is quite significant. I think by now the whole library is larger than Quantlib itself, which is lying underneath, which we are using heavily for pricing and for many of the models. Okay, so what do we want to do? Still, there are lots of standard approaches that we want to implement in terms of credit risk, or counterparty credit risk capital, FRTB standard approach, the CVA approaches, the basic and the standard approaches. Yeah? I already told you this, the CVA sensitivity, for instance, is one thing that we are working on to use AAD for that, and that again is needed in the standard approach for the CVA, for instance, so that's where this is coming from. I already mentioned the performance speedups that we are looking at. We want to implement more models. Yeah? At the moment, especially on the exposure side, the risk factor evolution side, the models are relatively simple and straightforward. We want to invest more into multi-factor models, stochastic volatility models. At the moment, we only have those in the pricing and in the sensitivity calculation, but not so much in the exposure simulation. And I already mentioned this, the entire data model is certainly not mapped into Python at the moment, so you may not be able to inspect, I don't know, a calendar item or something like that from the Python interface. You can see the analytics, run the analytics and get the results back, but you cannot inspect each and every single instance of every data type that is used in ORE. So that's what we mean here by extending the ORE Python coverage, right? And then QuantLib and ORE have diverged a little bit, so we have had to make extensions of QuantLib or changes to QuantLib to support what we are doing in ORE, and we want to get all that back on track, that QuantLib and ORE don't diverge as much as they do at the moment. It's not as bad as I made it sound now, but still, we want to be streamlined, basically. So I already mentioned this in terms of use cases, right? So 150 clients, or even more by now, and 20 plus clients with ORE implementations on site that we know of, right? Because we have worked with them on projects to implement ORE. There may be more, I don't know. Who in this room had heard of ORE before this talk? Okay, then I guess nobody else is using it either, at least not that you know of. But you might be using it because you or your organization is one of the Acadia clients who are doing the sim calculation, right? Anyway, so we have clients using ORE. For instance, I already mentioned this, calculating stress tests, calculating sensitivities, calculating XVAs, market and liquidity risk management, for instance. One thing that I had never thought of when we started with ORE was really a client using the exposure simulation or the XVA simulation to just calculate how much collateral was to be expected in the next month or 3 months or so to do liquidity management for the front office, right? Things like that. And one very, very big factor is certainly model validation, because it is an open system, it is well documented, you know exactly what it's doing. So model risk groups love it. So we see a lot of questions or demand for ORE coming from that direction. Yeah? So model risk groups in banks or in larger other organizations. 200 forks of ORE, meaning that we see lots of activity in our own organization, showing you that we are working constantly on improvements, on extensions, right? And academic research, teaching, training, whatever you want to call it. We actively use ORE in a course cooperation with Northeastern University in Boston for derivatives pricing and risk modeling. This is a very nice course which bridges the gap between theory and practice. So there's a lot of theory, but also the practice is really being done in ORE. Okay, so I hope you've seen that this is unique in the sense, I'm not aware of any other system that is freely available with that kind of scope and both going in deep into the industry, but also the breadth of the coverage. I believe it is competitive. Like I said, we may need improvement on the modeling side, which we're working on, right? But in terms of scope and coverage analytics, I think you will not find something that offers more. The validation coming from the users, especially from the Acadia services, of course, is very, very strong, making it very robust and battle-tested, really, and making it also actively developed, like I said, and like the continuous versions that we publish show. Yeah, and again, to stress it again, it's free, it's open. You can do whatever you want with it. Yeah? So, that's basically it. Are there any questions? I would love to hear questions. Yes, please.
About the model integration, what kind of source data are you planning, or are you planning to have support for any standard out there, like FPML? You mentioned FPML before.
So, as part of our service for our customers, we offer to build adapters for them, for their data. That is basically only trade data, because obviously the Acadia service runs on our platform. We are using our market data, so we have one huge set of market data. But if you do a bespoke project where we integrate ORE into your systems on site, then we also help you, of course, build the market data interfaces. So we have a lot of experience with that from all the projects that we have done. So if there's demand, just ask us. Yeah, we're really very happy to help, because if you haven't worked with it before, of course it's complex to translate, especially if you have a very diverse portfolio, to translate everything so that it works from scratch, right? So we have a lot of experience with that, and we're always there to help with that kind of thing. Yeah. Yes.
So you mentioned this is open source, and that usually implies that you're welcoming contributions.
Yes.
Given the product is so niche and so challenging to get into, what is your experience with getting contributions?
Yeah. So like I said, we have had some over the past years, but like I said, only a trickle. So a few model improvements here and there, a few bug fixes here and there. And we would like to change that, yeah. So definitely, what we would like to achieve is to make it better known. I saw that a lot of people here didn't know it before, so the first step is obviously to make it known and get people to just play around with it, right? You can download it for free and just test it out, right? If it is for you, and if it is, then hopefully people will find more bugs. Right? People will find rooms for improvement for themselves, for their own organization, in terms of models, in terms of performance, whatever. So new curves, new calendars, I don't know, whatever you want to think of. But yeah, we're definitely welcoming anybody to contribute, really, in the open source spirit. Yes?
I'll ask a FINOS question. I mean, you mentioned you've got an FPML-like data model.
I'm 100% positive that we could build an interface, right? We haven't done it yet because we haven't had the demand yet. But like I said, we've attached it to so many different systems now that I'm 100% convinced that we can.
But you'd adapt to CDM into your internal bespoke?
I guess that would at least be the first step. I think I know where you're going with your question. Probably, could we build ORE on the CDM, on top of the CDM? And that might be a bit more difficult. But basically, that would move the adapter into ORE, right? Because then it would have to work with that directly. Yes?
I'm curious to know what components are involved. You alluded to just download it and run it, which implies that it's quite simple. But and you also started to talking about improving the performance of it and using GPUs. So I'm interested in how modular it is and what's the critical path that would cause the, where are the performance bottlenecks and so forth.
Yeah, so first of all, I guess the first part of your question or comment is, first of all, you need to have the boost libraries installed on your system. Again, something that you can do with Brew. Quantlib is actually part of the package if you download ORE from GitHub as it is. You will get the Quantlib version that we need for ORE to run. In the user guide, there's extensive documentation how you actually compile it on different platforms, be it Linux, Mac, or Windows, right? Still, we've noticed that people run into problems because you never know exactly what the setup of your development platform is on your machine, right? But usually it works. It may be more painful than I made it sound now, yeah? But what really is completely painless is the pip install. I mean, that works like a charm.
But it runs as like a monolithic application. It's not modularized where you can split components on different compute instances.
It's one chunk.
So it's a matter of just hurling performance at that monolithic application to increase it.
That's correct. So the other thing, where's the performance bottleneck, I guess, is mostly in the simulations, right? Once you start doing, I mean, think about XVA, you know, you have, let's say, 120 time points, you have a portfolio of 1,000 trades, and you want to do at least 1,000 paths, and we're talking already about 120 million pricings, right? And then if you have highly structured trades in there, that just takes a while. That's the nature of the thing. So that's where we are trying to squeeze out more performance, basically. Right. Oh. Any other? Yeah, please.
This is a kind of slightly broader question, but you know, we spent a lot of time this morning listening to about Gen AI. Do you see Gen AI impacting this, or is this, you know, you're not going to go near that side?
Not in the short run. I would say where I see AI being able to help would be in the calibration, for instance, of models, things like that, right? And I know that one of our clients is actively playing around with something like ChatGPT, talking to ORE, asking, can you price me an FX trade? Yeah, so like in natural language, like a trader would use it to directly kick off a pricing or an exposure calculation for a trade. So something like that. That's also where I see usage for AI, but in between, I'm not entirely sure.
I think a lot of people aren't.
Okay. Then, I'm over time anyway, so thank you very much.